Welcome to RTRSupportsLimited. Today we're breaking down the UK Business Bank Account Survival Guide for Non-Residents, the 2026 Master Playbook. Opening a UK business bank account is not the finish line. It's the beginning of a compliance relationship. Most guides explain how to get approved. Very few explain how to stay approved. In this video, you'll learn how UK banks actually think, what they monitor, why accounts get restricted, and how to remain operational long-term. Let's begin. UK banks do not approve accounts blindly. They approve based on assumptions. Assumptions about what your business does, how money will move, where funds will come from, how fast you'll scale, and how you'll behave over time. Approval is conditional trust. When reality matches expectations, banking is smooth. When it doesn't, reviews begin. Your first survival decision happens before you apply. Fintech banks offer faster onboarding, remote access, and are designed for international founders. But they monitor activity in real time. And they restrict quickly if something looks unclear. Traditional banks move slower, they require more documentation, but they often provide long-term stability once established. Most non-residents start with Fintech and transition later. Choose based on your stage, not emotion. Banks approve non-resident accounts based on clarity, not optimism. 3 pillars decide approval. First, proof of address. Banks want traceability, not convenience. Second, source of funds. They want to understand where the money comes from and why. Third, business explanation. What matters isn't just what you do, but how money flows. When these 3 align, approval probability increases dramatically. This is where most founders misunderstand the system. Monitoring begins immediately after approval. UK banks continuously reassess transaction patterns, volume changes, geographic exposure, behavioral consistency. Monitoring is not punishment, it's regulatory obligation. Banks flag patterns, not isolated payments. Common triggers include sudden spikes in volume, payments from unexpected countries, frequent personal-to-business transfers, third-party payments without context, high transaction velocity. A flagged transaction doesn't mean a frozen account, it means the bank needs clarity. Most failures happen for 5 reasons. Weak or inconsistent documentation, unclear source of funds, activity that doesn't match onboarding descriptions, ignored compliance emails, silent business model changes. Notice what's missing. Nationality. Banks don't freeze accounts because you're overseas. They freeze accounts when risk becomes unclear. Banks evaluate these together. They ask, does this address make sense for this person? Does this source of funds logically connect to that address? Do transactions align with both? When the narrative is clean, risk drops sharply. When it's fragmented, friction follows. Businesses evolve. Banks understand that. What they don't tolerate is unannounced change. High-risk shifts include moving into crypto, switching from services to e-commerce, adding marketplace flows, expanding into new jurisdictions, sudden scaling. Changing activity is allowed. Changing it silently is dangerous. Both enforce compliance, but differently. Fintech banks detect faster, restrict faster, resolve faster. Traditional banks detect slower, investigate longer, require more paperwork. Neither is safer. Predictability is what keeps accounts stable. If your account is flagged, don't panic. Pause unusual transactions. Read the request carefully. Respond clearly and calmly. Provide exactly what's asked. Arguing or opening multiple new accounts usually makes things worse. Most reviews are resolved when handled properly. Founders who struggle with UK banking share one trait. They treat banking as a tool, not a relationship. Successful non-residents understand. Predictability beats cleverness. Transparency beats silence. Communication beats speed. This mindset prevents most problems. Before applying, clear business explanation, strong proof of address, clean source of funds. After approval, monitor transaction patterns. Respond quickly to bank emails. Keep documents current. Before scaling or changing activity, inform the bank in advance. Adjust expectations gradually. Prepare supporting documentation. This checklist alone prevents most failures. A UK business bank account for non-residents is not fragile, but it is conditional. Banks don't want to block your business. They want to understand it. When your documents, behavior, and communication stay aligned, UK banking becomes stable, boring, and reliable. Exactly what you want. Approval gives you access. Compliance keeps you operational. Thank you for watching.
Are you looking to start selling online in the UK from your country? RTRSupportsLimited offers hassle-free UK online seller account services for worldwide entrepreneurs. Our expert team guides every step to set up your Amazon seller accounts quickly and smoothly. We take care of everything for you, making your entry into the UK market smooth and successful. We guide you through every step so you can sell internationally with confidence. Start growing your business today. Services that we support: UK company formation, UK registered office address, UK phone number, UK bank account, Payoneer, Revolut, PayPal, etc. Most importantly, UK nominee director, that is UK local resident, and marketplace listing. Get your UK online seller account up and running today. Contact RTRSupportsLimited for more details. Contact on WhatsApp number +44 7765 310446 and visit RTRSupportsLimited.com. Thanks.
If you found this valuable, subscribe for more strategic guidance on building internationally the right way.